Hi, welcome. It's Mary Ellen McGonagle, Senior Managing Director of Equities here at Simpler Trading with your weekly Edge Show for January 6th, 2023. Let's take a look at what we're going to be covering today. As usual, we're going to see where did the markets close after today's fairly sharp rally, and then take a look at what you can anticipate going forward. Also, we're going to share with you some of the headline news that drove price action this week, pretty impactful news. And then last up, viewer question of the week. And this is all about identifying sector rotation and then from there, identifying ways that you can capitalize on that with individual stock selections. So let's go ahead and take a look at some of the news last week that came out that pushed the markets. First up, the Federal Reserve, when closely examining the notes from their latest FOMC meeting, it was revealed that not one of the governors nor Fed Chair Powell, president, sees any chance of interest rates being cut this year. Now, not overly surprising, but it was news that drew the markets lower, and that came out on Wednesday. Also, growth stocks outperformed this week, and the big news there is interest rates pulled back, and I'll share with you a view of the current yield on that 10-year Treasury. Also, today, Friday, very impactful employment data. It showed that while December jobs increased slightly, there was a slowdown in the growth of wages, and this is what drove today's sharp market rally. Wage growth has been a real thorn in the Federal Reserve's side in the sense that as wage growth continues, consumers will continue to spend, which in turn will keep inflation elevated. So this slowdown in wage growth was very welcome news. Also, we did get news from the ISM Service Index, and that is a reading of growth or contraction in the hospitality industry. And the December number was the first negative reading since the early pandemic. And this was also cheered because a slowdown in this very large part of the economy, the service portion, is welcome news again with an eye toward keeping interest rates not as high. So also next week, very important news will be coming out, and that is going to be that core CPI number. This is a very closely watched inflation number. Certainly the Federal Reserve will be paying close attention. And then also we do have some keynote speakers by way of Fed Chair Powell as well as other Fed governors, and that was a mover. This week we did see talks this week impact price action. We anticipate that to take shape next week as well. So from here, let's go ahead and take a look at where did the markets close for the week. And here we are looking at a daily price chart of the S&P 500. And we can see today's rally, 2.3%, helped push the S&P 500 up above this pink 21-day simple moving average. Your next area of upside resistance is going to be this red 50-day simple moving average. We're fairly close. That 50-day is at 3904, and the market's closed at 3895. So quite close. A move above that would be viewed as constructive. But let's take a look at these outside momentum indicators, also very important. We can see that RSI did dip just into positive territory. That's good news. That's your relative strength indicator. That is something you want to see continue to trend higher. As we move lower here, taking a look at the faster moving momentum indicator stochastics, not quite in positive territory, stalling as it got up to that 50. So mixed on the momentum front, and we are very close to upside resistance here at that 50. So not quite a green light yet, but certainly some very positive price action within some of these industry groups that we'll get into as we move forward. To begin, we can take a look at the 11 sectors in the S&P 500, and this is a 2-month daily price chart view I've added an RSI, that's a relative strength indicator, sorted the group in descending order. And the purpose here is to be able to quickly identify strength. That's going to be groups or sectors up here in the forefront relative to weaker areas down here in this lower right quartile. Equally important is going to be the ability to search out and identify rotation. And the way that rotation will take shape is if you do this particular exercise on a regular basis. Certainly my show, I do that for you. And you're on the lookout for groups that are progressing from this lower quartile up to the forefront. And then likewise, you do want to be aware of those areas moving into the weaker quadrants. So let's go ahead and take a look at the forefront groups up here, and we can see financials, communication services, industrials, and then staples. Now, I will tell you over the last several weeks, staples, healthcare, and utilities have been up here in the forefront as a very defensive sentiment has taken shape among investors. So we are starting to see a little bit of a divide where the defensive areas are fading just a bit, making room for some of these bigger movers here up at the forefront. And most notable is the move into financials. This is XLF is the ticker symbol, and this was the second top performer for the week, up 3.6%. That's relative to the S&P, which was up 1.5%. So I'll share with you some of the strength taking shape there. And in our next segment, I'll share with you some rotation that's taking place beneath these sectors. So let's go ahead and take a look at some of these weaker areas. Important to note that while technology did have a 3% rally today, not enough to push this group into positive territory here. Your momentum's still in negative shape, but there is one sub-industry group that we can take a look at within tech that turned positive today, or certainly somewhat positive near term. So let's get into that. We can take a look at some of these sub-industry grouping. I like to use ETFs that are really quite relevant and powerful as far as identifying, again, where that strength is. So up here in the forefront, we can see gold is remaining quite strong. This is GLD, the ETF, and you can see that it's in a nice confirmed uptrend. This is something that I talked about quite a bit last Monday in my weekly MEM Edge report that comes out normally on Sunday. And there are certain dynamics that are has me anticipating a continued move into these commodity-related stocks. So moving along, this is that sub-industry group that I mentioned within technology that has moved into positive territory here, but certainly only on a very potential near-term basis, and it is not entirely positive. Let's take a look. This is the semiconductor ETF, SOXX. Of note, the RSI is now in positive territory, and we did see the group move up above both that 50 and 21-day simple moving average. Super big volume. We are poised to have that black line cross up through the red, which can signal a downtrend reversal, but it has not quite taken shape yet. So we do still need more work. And then, of course, we do need to see how this index or this group behaves at this critical 200-day simple moving average. At the end of the day, you also would ideally like to see the overall tech sector come to life, certainly given that interest rates pulled back last week. So with that in mind, let's go ahead and take a look at that yield on the 10-year Treasury. And we can see that it waffled a bit, but your general trend was down before a significant decline today. The yield on that 10-year is now at 3.56. And going into last Friday, it was at 3.8. It was very close to that critical 4% level where it can really impact the broader markets. A decline in interest rates is generally viewed as a positive for growth stocks. So we did see some vibrancy, but not a lot given that significant drop there in the yield on that widely followed 10-year Treasury. Other movement here, the US dollar, which had been in a downtrend, also saw deterioration today. A lower dollar is good for those commodity stocks such as gold. And then I mentioned to you that financials were one of the top performing sub-industry groupings or sectors last week. So let's look at a sub-industry group here. And this is KRE, the regional banking ETF, up 3% today. You can see that the momentum is shifting into positive territory. And then also we already had that black line up through the red, signaling a potential reversal of this downtrend. So we are seeing nice vibrancy here in bank stocks. At the end of this, I will share with you one name in banking and then also a name in the semiconductor space to keep an eye on, because the broader markets are not positive yet, but you will want to have a watch list on hand. So also paying attention to some of the movement last week. Good news was that biotechs did come back into favor. Biotechs had fallen out of favor with this break below this 50-day simple moving average. So we did see a move back above. We can see the RSI now in positive territory and that MACD poised to experience that nice crossover. Lots of vibrancy. This is an area that I've been favoring, and I do still have several biotech names on my suggested holdings list that you will want to be aware of as I continue to add stocks to this particular area, simply because it is healthcare, it is defensive, it is an area that during 2008, it had several outperformers because of the continued development of new treatments for diseases. So despite being a bit riskier, there are some sound reasons for biotechs to continue to outperform. So I talked about sector rotation, the movement into gold stocks in addition to purchasing stocks in that industry group. There is a large cap name that also is on the move. This is Caterpillar, CAT. In addition to being a very heavy equipment stock, they also are involved in mining activity. And we can see that the stock, this is this gap up here at the end of October, very strong numbers. And the stock had a continuation rally and then marked time while the rest of the markets were very difficult period. And from here, we can see that the stock has broken out of a flat 2-week base. Very big volume, outside momentum is constructive. So this is one way that you can play the move into these metals, because the need for this mining equipment in the face of increased metal pricing should continue. So from here, let's take a look at that potential sector rotation into these bank stocks. KRE is that regional banking ETF. And I'll share with you one way that you can screen for potential candidates poised to trade higher. So from here, I'm taking us over to a service called Finviz, and what you can do, many different ways that you can screen. But quite simply, I did ask to look at all regional banks. And then from there, I wanted to see those names that are above their 20-day, 50, and 200-day simple moving average. In other words, they don't have that upside resistance potentially there. Very, very simple screen. From there, you can go ahead and sort the list by market cap. As of, for instance, what you'll see is a lot in the way of foreign banks. This is something that has been showing up here of late. But then as you move forward, we can take a look at some of these banks that are up here at the forefront. And you can hover over that ticker symbol to see, is the stock chart looking somewhat interesting. So from here, let's take a look at TCBI that was on that list. And you can see this is very typical of what we are seeing in any number of bank stocks. It's been a very dicey year. This is Texas Capital Bank shares. And we can see it's now trading above each of these moving averages with its outside momentum indicators in positive territory. Certainly one of the largest banks that was on that list is PNC. They did receive analyst upgrades today. And we can see this is out of Philadelphia, actually, and the much larger market cap name is also now trading above each of these moving averages with its outside momentum indicators in positive territory. That said, this would be more of a watch list stock for me because you can see that it had a previous period where it was up above that 200-day, but it did very quickly fail. I will need to see these shorter term moving averages trade back above the longer term to confirm a more pronounced potential move. We can also take a look at a weekly chart to get a bit of a longer term view, and we can see that it is now above that 40-week or 200-day simple moving average with its outside momentum up here in positive territory. But again, we did have that head fake back here. Already been trending positively. The stock is in a nice uptrend. And then we had that nice MACD crossover take shape this week, definitely poised to trade higher should we see this banking group continue to remain vibrant. That's it for this week. Everyone have a fantastic weekend, and I will look for you again next Friday.
Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.